So I would continue to, reclaiming my time, I will continue to make the point that we are giving advantages to state capitals to raise taxes on citizens. That's what's happening. So if you continue to allow Sacramento to deduct, they're going to continue to raise taxes on Californians, on my constituents. The fact remains, as I stated earlier, these deductions go to the wealthiest people. So if you are advocating keeping SALT deductions for states to allow them to do that, you are advocating for the most richest citizens in your state. And that's just a fact. And so if you added that to businesses like this, like you want to do, I can't imagine that this would actually pass if you guys were serious about this amendment. But this is designed to kill the bill, and I just want to make sure, Mr. Chairman, that I am on the record as opposing new taxes for California, and getting rid of SALT does that.
The gentleman uses time. Mr. Neal, you're recognized to speak on the amendment.
Thank you, Mr. Chairman. I support the kind amendment, and I support it because I think that it calls attention to the grievance that we feel on this side, where you are subtracting a benefit for middle-class people across the country in terms of the state and local tax deduction, and while simultaneously not addressing it in an equitable manner. So once again, I would repeat, we're repealing the estate tax, we're repealing alternative minimum tax for the 4.5 million families that now pay it, and we can't bring ourselves to say that middle-class people ought to be able to keep the state and local tax deduction. And to allow other people to speak on this, I would also just say to my friend Mr. Nunez, I'm not quite sure of what happened in how the gas tax was raised, but when you live in a state where 1 out of 8 people in America reside, it strikes me that the state has done very well over my time in terms of infrastructure expenditure from the federal government in terms of partnership. I mean, it's a marvel at what's happened, and I look at the upkeep and I look at what's happened across that state. So I think here we're talking about equity once again and fairness. We're repealing the estate tax, repealing alternative minimum tax for 4.5 million people, and on the estate tax, 0.2%. 5,000 families in a nation of 320 million next year will be asked to pay the estate tax, and we're taking the middle-class tax benefit away from people who use the state and local tax deduction. And I yield back my time. Oh, I'm sorry. I've got yield to Mr. Thompson.
Thank you, gentlemen, for yielding. I just want to point out that in my district, 40% of my constituents use this deduction, and it means about $15,000 to them. So according to my friend's logic, he wants to reduce their tax burden. You're increasing the tax burden on folks in my district. As a matter of fact, 24% of your constituents use this deduction, and by repealing it, it's going to cost them about $10,000 each. So you are, in fact, increasing the tax burden on middle-class folks. Surely, wealthy people take advantage of this too, but this is something that middle-class Americans can take advantage of. And what my friend Mr. Kind is doing is trying to bring equity to this issue. We're going to repeal it for working class, middle class Americans and allow their tax burden to increase, but we're going to keep it in place for businesses. I can't for the life of me understand why we would treat them differently than we would treat the people that your side of the dais has for 2 days now claimed to be that you're trying to help. This is not a help. If Mr. Kind's amendment were to be accepted, it would be equal treatment across the board, and we should either treat folks equally, or we should be honest about what it is that you all are doing. And I yield the rest of my time to Mr. Blumenauer.
I appreciate my friend yielding and diving in on this. I appreciate Mr. Nunes being involved with the back and forth, because I was truly trying to clarify. But the clarification didn't help me much. Yes, it would apply uniformly across the country, but Mr. Kind's amendment would really apply uniformly across the country, all businesses would be treated the same way you want to treat working families. Now, it's not just rich people. I have 40% of the people in my district who claim this, and they're not quite as wealthy as Mr. Thompson's folks in the Napa Valley, but it's $13,000.
You don't make as good a wine.
Those are, oh, stop it. I want his words taken down. There's no reason to not treat businesses the same as individuals until, give me some help here. Mr. Kind is trying to have uniformity across the country and not tilt this even more against people who don't need the help. You've concentrated the benefit at the top. You're going to make it worse by getting rid of the inheritance tax for a few hundred people a year. And you're going to punish families and not have businesses treated the same. That is absolutely incomprehensible to me.
Time's expired. Mr. Smith.
Thank you, Mr. Chairman. It's interesting listening to the exchange here and the dialogue. I kind of thought Nebraska was a high property tax state at the beginning of this whole debate, and I've learned that there are other jurisdictions that are even higher, as shocking as that might seem. But I look at the overall tax burden, the ability to pay. Certainly I represent a very intensely agriculture district that has, I would argue, an unfair burden placed upon them created by property tax. I can't imagine saying, well, let's put these taxes, discontinue the deductibility. Mr. Kind, I assume, just to clarify, Mr. Kind, if you would yield, your amendment then would place agriculture land along with all other businesses consistently, correct?
Would this apply to corporations in the agribusiness world? Yes, it would. Yeah,
but even family farms.
But as you know well, family farms
business
usually have very low tax liability because of all the expensing they're allowed to do every year and all the depreciation that they're allowed to take. So their tax liability usually isn't that large to begin with.
Well, I would say that at least in Nebraska, the property tax burden placed on agriculture is significant. And as we look at our goal, our objective of this entire effort to grow the economy, grow opportunity, grow the number of jobs, I think it's important that we continue in this direction and that this amendment simply stands in the way of that. I know that there are efforts to continue the estate tax that is a double tax. To me, that's unfair at any level, at any rate, at any exemption. It's still unfair. And it's going to hit small businesses. And some would say, well, not small enough, but that's not a good argument when we're looking to grow opportunity and expand the economy. And in fact, it's interesting that the chairman of Gallup said a while back that it's not government that creates jobs. In fact, he would argue that it's not even employers that create jobs, it's customers who create jobs. And this tax reform bill is about creating more customers. It's not about Washington choosing, okay, which narrow group can we give this benefit to, and this benefit to, and this benefit to. It's about broad-based relief, and we've heard that confirmed by Mr. Bartold in terms of folks all across the spectrum being able to benefit. And when folks all across the spectrum benefit, that creates more customers, and those customers create more jobs. Thank you, Mr. Chairman. I yield back.
Mr. Levin.
Well, I hope everybody is confused as Mr. Blumenauer is. Mr. Blumenauer, you said it's confusing because we're repealing the deduction for state and local taxes for individuals, but not for corporations. And why are we doing that? And Mr. Nunez's answer is that all corporations are being treated the same, but that doesn't answer the question, why are you making a distinction between the individual and the corporations. The family farm is an individual. So what's the answer? You say that you want to do this because the states tax people, the income tax individually too high. So you want to discourage that. Why doesn't that logic apply to taxes on corporations? Local taxes and state taxes on corporations. So I think somebody should answer, what is the logic for, in this, deciding that individuals cannot deduct their individual state and local taxes, they can their property taxes, but letting corporations do it? I'll yield to anybody who wants to explain that. Mr. Nunez, I'll yield to you. Explain why individuals cannot, but corporations can. What's the answer?
Well, if gentlemen will yield, appreciate him
I will.
yielding. You'll have a chance to vote on this amendment. I'm going to find it hard to believe that you are advocating, that on your side of the aisle, you're advocating keeping this tax deduction that is guaranteed to get to the most richest Americans in the United States of America. As you know, businesses don't have votes, and so if you really want to treat businesses differently, we can entertain this if you would like this to pass. But I don't believe you guys really want this bill to pass.
Okay, but two things. First of all,
For this amendment, I apologize.
Right. This issue doesn't relate only to the very richest. I think you should stop saying that, because you're using our attack on your bill as applying mostly to the very wealthy compared to the person who's in the middle class. And the facts show that we're right about that. And so then you try to twist it and say, okay, be consistent, because you're worried about a bill that essentially gives the biggest break to the very richest, while this amendment essentially relates to the very richest when it doesn't. It applies to the very richest and lots of other people. So why do you keep saying that? Well, why do you keep saying that? I think you're so desperate to get a bill passed that when we point out illogic or we point out unfairness, you just kind of duck it. So again, tell me why businesses should be in a separate category from corporations, should be in a separate category from individuals. Somebody on your side say that. Somebody answer.
If the gentleman would yield.
Yes.
You know, businesses pay taxes on their profit, right? And what they have to do is compute what their profit is. And Section 162 of the Internal Revenue Code says that in determining profit, they shall deduct all reasonable and necessary business expenses.
Okay, but the tax, I'll take back.
One of the business expenses is taxes.
Okay, Mr. Wright.
So if you take taxes away,
Mr. Wright,
then you are distorting what the...
Mr. Levin controls the time.
What the
Okay,
profit
but
is.
Mr. Wright, I'm glad to have back and forth, but let me just respond. The tax code also says that individuals can deduct what they're paying in state and local taxes. That's what the code says. It says the same for businesses. And my question...
For individuals...
Let me finish, Mr. Wright.
Mr. Chairman,
Well,
just remind the
just
chairman of
back and
interrupting.
forth.
Hold on. Mr. Levin controls the time. Restore it for 15 seconds.
So you don't answer the question why corporations should be treated differently than individuals. Maybe taking away from individuals raises more revenue, but give a response. Give a rationale. You bet.
Gentleman's time has expired. Mr. Rice.
Thank you, Mr. Chairman. You know, it's fascinating to me that in the face of all this evidence and all these studies that have been done already on this plan. Mr. Barthold, again, let me ask you, in every quintile of income distribution in America, when this plan is taken into account, the tax reduction, the rate reduction, the increase in the standard deduction, the elimination of SALT, and all these other components of this plan, what is the tax effect on every quintile in of the American taxpayer?
Mr. Rice has reported across all our income categories, on average, there's a net tax reduction.
There's a tax reduction. So, I will toward the end. Let me finish and make my point. So, we continue to say that that there's going to be a tax increase when, in fact, it's not just Mr. Barthold and the Joint Committee on Taxation here, but it's also the Tax Foundation. It's also the Washington Post has issued statements saying that in every level of income in America, they will receive a tax cut. And the folks back home, I don't think they really care if their tax cut comes from writing off state property taxes, or if it comes from a reduction in rates, or if it comes from the standard deduction. What they care about is, first of all, they want this thing simplified where they don't have to hire accountants for $100 an hour to figure out how to comply with the law and not go to jail. And the second is they care about paying as little as they can to the government, having as little flesh as they can exacted from the government. And finally, going back to this amendment, where you propose here to take away from businesses, it says all business organizations, the ability to write off state and local tax deductions in calculating their profit. So what would the effect of that be? The effect of that would be that the tax rate on the business would go up. Well, gosh, here we sit right now. We hadn't had tax reform since 1986. It's been 26 years now. Excuse me, I'm counting wrong. 31 years now. And at that time, our tax code was pretty competitive. But since then, pretty much everybody in the world has left us by. The average tax rate for businesses in the world now is about 20%. That's what we're trying to get down to. We're trying to get down to at least be competitive. And this amendment wants to raise taxes on business, which is, pretty ridiculous, actually, because what we're trying to do is be competitive. What we're trying to do is stimulate the economy rather than hold it back. What we're trying to do, one more time, is to create jobs and to restore this as a land of opportunity. And what you want to do is a disguised increase in taxes on all business organizations. I don't think the folks back home would like that. I think the folks back home understand that they've seen American jobs going overseas. I mean, that was one of the reasons why Donald Trump got elected. Carrier was leaving Ohio to go to Mexico. Why? Because of tax rates. And what y'all want to do, what you're proposing here, is to take away one of their reductions and raise their rates. I mean, the whole purpose of this bill is to try to get back to over, or at least to average growth, what we've had under every single administration since World War II until Barack Obama. And since then, we've averaged about 2% or less. And we've left a generation of folks coming out of college behind. And instead of lowering taxes, which is what our bill proposes, to make these companies competitive so they can create jobs and raise wages for middle-class America, you want to raise taxes on businesses and make them less competitive. And then you get up there and say that our bill, in spite of everybody that's looked at the doggone bill and says it will lower taxes for the middle class, you continue to push the falsehood that it will raise taxes on the middle class. I don't know. We're just talking over each other. I yield back.
Mr. Larson.
Thank you, Mr. Chairman, and I yield 30 seconds to the gentleman from
Mr. Rice, you said a falsehood. Mr. Bartholt used the word average, and he gave us a chart, and everybody should look at it, that in the year 2025, there'll be an increase in taxes for 21% of people who are making 75 to 100, and 26.7 for people making 100,000 to 200,000. So just look at the chart. In fact, so that everybody has it, I'm going to distribute it now to everybody, this chart, and I think to the media, so that you understand what's true and what's false. I thank you very much for yielding.
I thank you, Mr. Levin, for bringing further clarity to this discussion, and I thank Mr. Kind, who I associate myself with in my comments. And at the beginning, he talked about his amendment as being what's fair is fair. And my grandmother used to have a saying that said, what's good for the goose is good for the gander. But what we see in this, in Mr. Kind, the reception to Mr. Kind's amendment is no, that's not the case, because this bill has been distorted and weighted where it takes money from states and people in the middle class in states and transfers it to major corporations. So Mr. Kind has said, well, let's balance that off. Why is it that it's fair to take a SALT deduction away from people who itemize their deductions, but still let corporations keep it? Mr. Neal responded by saying, come on, how can you further, along with that, also further weight it by getting rid of the AMT tax and also getting rid of the estate tax as well? And so it becomes a very lopsided argument that Mr. Kind is trying to bring clarity to by saying what's good for the goose is good for the gander. Let's make this fair. And if corporations, you know, are getting the breaks that they are, shouldn't we try to level the playing field so all those middle-class families, and we'll have amendments later on to see if joint tax will guarantee that all middle-class families will receive a tax break, and it will be subject to the long-term ramifications of that. And with that, I'll yield to my colleague, Mr. Kind.
I thank the gentleman for yielding. Guys, this isn't complicated. This amendment's trying to help you with the optical problem you have right now by taking away state and local tax deduction for millions of working families and saying, hey, we're going to be fair and we're going to ask corporations to chip in too and treat them the same way. They are, after all, personhoods now, according to the Supreme Court. But more importantly, you got a $2.3 trillion hole that needs to be filled. This is one way to help fill that. You guys got a bird rule on the Senate side that's going to smack you in the face because they're not going to be able to deliver what you're trying to offer the American people in this bill because of the budgetary rules out there. And get ready to get stabbed in the back by the Senate, too, with the corporate rate that they're going to come up with, because that knife is coming. And we all know it is. But let's also be honest that the former Republican chair of this committee recently introduced a comprehensive reform that was all paid for that called for a corporate rate at 25 and not 20. Because he felt that that would enable them to be competitive on a global scale. And you know what? I think he's right. Going from 35 to 25 is a generous marginal rate reduction for corporations in this country. And it makes them competitive with the OECD nations, where you guys conveniently ignore the VAT and the carbon tax that these multinationals are also subjected to, along with the corporate rate that they're living with overseas. And by the time you make those tax adjustments, 25 is looking pretty darn generous. And that would go a long ways of closing the $2.3 trillion hole that you have, but also going home and being able to look these families in the face and say, you know what, we're asking you to chip in for the sake of simplification so we can lower rates or double the standard deduction, and we're asking corporate America to do the same thing. And when you exclude them from the business they're doing both here and abroad, you've got a political problem. And that's showing up in all the polling and all the feedback that we're getting from our constituents and the calls that are coming into our offices right now. So I'm not trying to be cute or fancy or malicious with this amendment. I'm trying to make your job easier when it comes to tax reform, knowing what's coming up in the Senate in very short order. And I yield back.
Mr. Renacci.
Thank you, Mr. Chairman. Mr. Barthold, are itemized deductions interest, property and state taxes, medical expenses, charitable contributions, miscellaneous deduction, investment interest? Is that the list of itemized deductions?
Those are the major ones. I mean, within,
Yeah, I mean, the miscellaneous has...
within miscellaneous, there's
right,
a lot
has
of,
much
there's
more.
a lot of things.
So on a tax return, a taxpayer lists all of those items, and today, under current law, because somebody on this committee, whether it was 50 years ago, 100 years ago, whenever the tax code was written, decided to simplify it, they said, if you get to $12,600, which is the standard deduction today, that when you list all of that, as long as you don't exceed that, we're going to give you that deduction. Is that correct?
That's the way the law works, sir.
That's the way the law works today. So somebody on this committee years ago said, we want you to come up with those deductions, but when you get to but if you don't get over 12.6, then you don't even have to keep the documentation. We're going to give you that deduction. So today, 70% of Americans, I'm going to use your number now, I said 70% of Americans don't itemize because they don't get to the 12.6 because we replace all their miscellaneous deductions with the standard deduction. Is that correct?
Well, not just the miscellaneous deductions, the other deductions.
Right. So when we double it, 95% of the people don't have to worry about itemizing because we've replaced that, correct?
Yes.
That's
yes.
your number. So we've actually benefited by this law, 25% of the people who have not gotten a deduction, we've actually benefited under this law by doubling it and taking it to 95%. Would you agree with that?
Well, Mr. Renacci, some people would be awash.
Right.
And you do leave, it's probably a little more subtle than that because you do leave itemized deductions for mortgage, charity, and property tax. So there's still the choice to make. So people that previously had been claiming, let's say, mortgage interest deduction, charitable deduction, property tax deduction, and other tax deductions, then it depends what have they lost relative to the increase in standard deduction and making that choice between the two.
Right, because the standard deduction is much higher. So they're basically, there's 25% of the people now.
Will the gentleman yield?
That are not at this time. Let me finish. I'm trying to get to a point. So there's 25% more people that are getting a deduction based on those numbers, correct?
It's clearly more people will elect to choose the standard deduction.
Over all these itemized and state and local taxes and everything else,
And that's,
correct?
well, and that's in part.
So this bill
option
actually helps 25% more people. So we have actually not, I keep bringing this up, we're not eliminating deductions, we're replacing it with a higher standard deduction. So many of these individuals will not be able to take this deduction, and by the way, 25% more will be able to get a deduction that they wouldn't be able to get on average. Is that correct?
That's certainly true of the standard deduction.
Exactly. So we've got to get off of this that we continue to take a deduction away. We have not taken a deduction away, but in fact, we've replaced it with a greater itemized deduction. So, Mr. Kine, I guess what I would ask you, because it's interesting, because I heard you say equal treatment, fair is fair, level the playing field, business as well as individuals. Are you willing to give the businesses a standard deduction? That's fair. That's equal treatment between individuals and businesses.
Hey, I'll take that deal. If you want to apply this doubling of the standard deduction to corporate America, let's do it, because that $2.3 trillion would disappear overnight
Well, I think
if we
what we
did
need
that.
to do is we need to look at that. But yeah, I mean, if you want fair is fair, you got to give businesses, because that's what you said.
More importantly, let's have some hearings and actually discuss this, because this is where it gets complicated. And that's something that's lacking before this committee today, is that type of feedback.
I'm on my time. But what's interesting is what's fair is fair. What's equal treatment, what's level the playing field, these are all the words that my friends from the other side said, business as well as individuals. If you're going to come up with an amendment like this, and you want it to be fair, then you've got to come up with a standard deduction. So I oppose this amendment because this is a one-sided amendment. Come up with a standard deduction that makes it fair is fair, equal is equal, level the playing field, business as well as individuals, and maybe somebody on this side would consider...
I'd be happy to work with you on that.
The gentleman yield?
Be happy to work with you.
Mr. Crowley. Ms. Sewell.
Thank you, Mr. Chair. So I'd like to attempt to answer the question that my colleague, that our colleague, Sandy Levin asked. Why is it that our colleagues on the other side won't answer the question, why are you willing to give middle-class families, take away their state and local tax deduction, but not willing to do the same for businesses? As I said in my opening statement, this is about values. What do you value? And Sandy, what they're saying is that they would rather value businesses over middle-class and working families. And that's unacceptable. You know, if you look at the fact that we are choosing winners and losers in this tax code, and what we're basically saying, Sandy, is that the winner should be the businesses and not individuals, not the hardworking people that we represent. And it's unacceptable. You know that I represent one of these recipient states, not a donor state. The state of Alabama receives almost $2 for every $1 we get from the federal government. But even my district, which is a relatively poor district, would benefit from not being doubly taxed on their state and local deductions. In fact, in my district, 28% of the taxpayers use the SALT deduction. And the average SALT deduction is around $6,348. And I can tell you that my hardworking folks that I represent, they would love to be able to continue to deduct that from their income tax. And it's unfair that we are placing a burden on middle-class and working families that we're not willing to do the same on businesses. Look, I represent big companies as well. I think what we're saying is equity and fairness here. And I think that Congressman Ron's amendment is a fair amendment. It really gets to the heart of why it is we're talking about it. We're making value judgments here, colleagues, value judgments. And my values are with the people that I represent. And those hardworking folks deserve to have a break. So, I also don't understand why my colleagues on the other side would not choose to do this when it would conceivably raise way more revenue than not allowing the deduction on state and local taxes. So I asked Mr. Baltol, what effect would it be on revenue if we leveled the playing field and we required businesses to not be able to deduct state and local taxes?
Well, the first order effect would be it would increase business tax liabilities, would also change a lot of economic.
But wouldn't we raise more money? I mean, if this is about revenue generating, there's a $2.3 trillion gap here in and our colleagues across the aisles assessment in this bill. So $2.3 trillion gap deficit. Wouldn't we raise money by
No, I said you should raise money. We've not done an analysis of how much that might be.
Okay, but it would be higher than probably what the analysis is for individuals, which is 1.5.
I could not make a judgment as to the size. It would increase business tax liabilities, so it should raise money.
Look, the bottom line is that we're making value judgments here, and it's really, I think, woefully unfair to put the majority of the burden of paying for this $2.3 trillion giveaway to the wealthiest 1% in America, to put it on the backs of hardworking folks.
Will the gentlelady yield?
I will yield.
Mr. Bartold, I would like to ask you this, because we've heard constantly from the side this analysis, and they keep on turning to you. Let me ask you this. Just because people no longer would be able to itemize, just because they would no longer, and that's what the question assumes, that this bill would go into law and they'd no longer be able to itemize, does that mean that they would be as well off as they were under current law, under all circumstances? Or is it a mixed bag?
No, sir. As we discussed yesterday, there's many moving pieces in the overall reform of H.R. 1. So if you're just comparing.
That's what I thought you were getting
binary
to.
Comparison of the.
All they're saying is this just means that this is the only remaining option.
Mr. Schweikert.
Thank you, Mr. Chairman. And this may be one of those moments where I actually want to think through this, Mr. Kind, and I may come across a little bit disharmonious to my brothers and sisters on both sides. Let's think this through. And let's just use a simple example, and let me first off point out, I used to be the tax collector for the fourth most populous county in the United States, so I have a little bit of experience, particularly in the property tax world. So I walk into my local grocery store and I buy a loaf of bread. In that loaf of bread are the costs from that grocery store. Property tax is part of that. If you're already telling me, if part of the argument coming from the left is that we have an unusual distribution of state and local taxes, in some areas being much higher than other regions of the country, did you also, just through this amendment, make the decision that if that higher property tax, higher income tax that a business right now would be taking out of that loaf of bread because they can deduct it, did you just sort of double down on what you were arguing was a distributional problem in parts of the country? And look, for someone like being from Arizona, which is a very moderate property and income tax state, so business would actually book its profits in the most marginal state for its income tax, but a heavy user of real estate, like grocery stores in your community, can't sort of do that type of state chartered shifting for its profit. So it would be picking up its property tax, particularly there, and by losing its deductibility, wouldn't you be in many ways just doubling up on your very argument you had before? Look, I understand both the concept of making an intellectual point, and now I'm just actually trying to walk through some of the math, because part of me says maybe we should at least conceptually set this aside if we need a future pay for. But do understand the doubling down impact you're going to have on those very high tax communities.
The gentleman,
just
doubled
that
point.
Mr. Kind, please, because as you know, you're one of my favorite people on the committee because I believe you to be very intellectually sound in this.
Be careful. The kind words you say now can come back to bite you.
It won't be the first time I got a Democrat in trouble.
No, I appreciate your thoughtfulness on this issue. And again, this is where it gets complicated, Mr. Chairman. It's exactly why we ought to do this the right way and have experts come before the committee and walk us through and explain the ramifications of what we're doing here, rather than closed doors, late at night, scribbling something in for the sake of some political victory.
This may be the one, Mr. Kind, that I can be your expert on, because I did this for a long time, and I was worried about Mr. Larson's folks buying a loaf of bread because we may have just really raised his costs, but you may have just shifted Mr. Larson's businesses to the beautiful state of Arizona. So with that, Mr. Chairman, I yield back.
Mr. Paxrell.
This is a move to strike the last word. This, to me, Mr. Chairman, is really a double standard. I mentioned it in the previous amendment, mentioned it yesterday, and mentioned it last week. This amendment by Mr. Kind, I believe, would prevent a double standard favoring businesses over the middle class. Now, that's a pretty simplistic statement, I will admit. But when you look at the numbers, you see how much revenue was gathered from each of these deductions. I think you would want to avoid that as well. So we're saying to families, and correct me if you think I'm wrong, we're saying to families that we're going to take this deduction away from you, the ability to use this on your federal taxes. And by the way, Mr. Chairman, you've caught it as well as I. The underlying tones of some folks that are speaking here today about the higher tax states. There's a reason for that, Mr. Chairman. Do you want me to go into that, which has very little to do with Mr. Kine's amendment? But I've caught it, and I don't like it at all. It has no place here. Talk about one America. We should be one America. But we're saying to families that you cannot deduct these local taxes and these state taxes, which we've been doing since the Civil War. And the reason why you can't do that is we're going to take, we don't need that because we're going to take care of you in doubling the standard deduction, et cetera. I think I put a few holes into that yesterday about where do we gather more money. So we're saying you'll have enough money here. You don't have to worry about losing any money. But then we say, well, the corporations could keep on doing this. Now, to me, that's a double standard. Mr. Chairman, can you explain to me how it is not a double standard? Mr. Chairman?
Mr. Pascrell, please continue with your statement on the amendment, please.
I had a question.
For what purposes? So once you finish your statement, at some point I'll be glad to chime in on it.
I just finished.
Thank you, Mr. Pascrell. Time has expired.
Will you answer my question, sir?
So, having just sat down for a moment,
okay.
if I may,
okay,
make sure we've got this.
Mr. Barthard,
so,
would you answer the question? Since the chairman does not want to answer the question right now.
Feel free to jump in here, Tom, anytime you like.
Since you just sat down.
Actually, I was a little confused. Could you repeat your question, Mr. Pascrell, and I'll try to answer it.
Isn't it a double standard if we're asking of families to give up this ability to deduct a deduction that's been available to them since 1863, and we're asking corporations, as I understand it, that you don't have to do this. We're doing it for families because we're going to make up that money that they're not able to deduct by doubling the standard deduction. What are we saying to corporations? Help me understand this, Mr. Barthard.
Well, I can explain the principle behind the deduction for businesses for expenses that they incur in earning income is you're trying to measure the income of the business after all costs, all usual and reasonable costs.
Right.
That's the standard that is applied.
So it's a different standard than for families using that deduction. Is that correct, Mr. Barthard?
That's the standard for business.
And that has been the standard for 100 and some odd years?
Well, remember, we haven't had an income tax quite all that.
Right.
All that.
I understand that, Mr. Barthard. You know what I'm talking about.
In terms of measuring business income, that has been the standard pretty much for that time, that all reasonable and usual costs of engaged in business are deductible at arriving at the income of the business enterprise.
Thank you. All time has expired. Ms. Delbenny, you're recognized to speak on the amendment.
Thank you, Mr. Chair. We actually had this conversation yesterday, Mr. Barthold, and I want to highlight it again because I think some of my colleagues are still struggling to understand why this amendment is so important. I asked you yesterday if a firefighter in my district would be able to deduct the state and local sales taxes that she pays from her tax returns. And let's say today, can she do that?
Since you're from the state of Washington, there is no income tax that individual.
State and local sales taxes is actually what I said.
Elect the sales tax election.
Yes.
And
okay.
if the total itemized deductions exceeded the standard deduction amount, they
but yes, she can deduct those today.
That's correct.
But under this plan, will that firefighter be able to deduct those sales taxes?
She would not.
Okay. So this changes. She has lost the ability to deduct those sales taxes from her federal income taxes under this plan.
That's correct.
So, will a corporation be able to deduct sales taxes on business purchases under the, or today? Today, can a corporation do that today?
As a general matter, yes. In fact, many businesses are exempt on sales taxes.
So, if they can today, now will they, under this plan, be able to continue to deduct that? So yes, so for the firefighter, she can't, she could deduct those sales taxes today. She won't be able to under this plan. For the corporation, they can today, and they still can under this plan. In fact, the corporation also gets a 15% tax cut, 15%. So when we talk about legislation, does this legislation that we're talking about treat corporations and individuals the same? The answer is no, and here's a good example why.
Will the gentlelady yield?
Please let me finish. No, they're not actually the same. Where corporations are getting a 15% tax cut, and they are, in addition, able to keep this deduction on state and local taxes. But the firefighter in my district isn't getting that. In fact, a lot of the things that might impact the firefighter in my district will also expire in 5 years, whereas the corporate reductions that are in this plan are permanent. So this is not about parity today. What this amendment, though, is about is trying to make one step towards parity, make sure that businesses, corporations are treated the same as individuals and families based on the changes that are being made in this bill. So it's just really disappointing that we've heard a lot of talk on the other side of the aisle, but the reality is there's a benefit that people take advantage of today, people in my district take advantage of today, that's going to be lost. But for companies, that benefit is not going to be lost. In fact, they're also getting 15% sales tax, or a 15% corporate tax cut. I want to yield to Mr. Neal.
Mr. Barthold, just because people no longer itemize does not mean that they are as well off as they are under current law. It just means that that's their best remaining option. I'm going to pursue this later on, but I would like you to maybe give a fuller answer to us.
No, that's correct, Mr. Neal. As I was explaining, there's multiple things you have to trade off. It is possible. I guess we should step back and understand again what the decision that the taxpayer faces is, and that's under present law, there are certain items that you may be permitted to deduct. If the sum of those items exceeds the standard deduction, you'd wisely choose to itemize those items, and if it's less, you'd wisely choose the standard deduction. Under H.R. 1, the number of items that you compare to the standard deduction has changed. So depending what your itemized deductions were under present law compared to the standard deduction under present law, compare the sum of itemized deductions that are permitted under the reform proposal compared to the standard deduction that is permitted under the reform proposal, you'd make the decision to itemize or not itemize. What I reported, as you just asked, was that more people will choose standard deduction under the reform proposal, but that doesn't necessarily mean that the total amount that they get to deduct from their adjusted gross income is the same.
It doesn't mean they're necessarily better off.
Some can have fewer total deductions. Some will have more total deductions.
Time has expired. Ms. Chu, you're recognized to speak on the amendment.
Well, when I heard the gentleman from California say that the SALT deduction only benefits rich Silicon Valley executives and Hollywood producers, I could not believe my ears. In reality, the SALT deduction benefits a wide variety of people. In fact, almost 40% of taxpayers making between $50,000 to $75,000 per year use a SALT deduction. And more than 70% of taxpayers earning from $100,000 to $200,000 per year use the SALT deduction. They don't sound like rich Hollywood producers to me. And in fact, the Government Finance Officers Association just did an analysis of the most recent version of the SALT deduction compromise, and they looked at an average family of 4 who owns a home and earns between $50,000 to $200,000, and they found that all 50 states would see tax increases, and California would be the hardest hit state with an average tax increase of 26.4%. And Congressmember Nunez, in your own district, 24% of the people in your district use the SALT deduction, a deduction of $9,844. They don't sound like rich Hollywood producers to me. Now, the Government Finance Officers Association says that that even if Congress were to offset impacts from eliminating the SALT deduction through increases in the standard deduction, the deduction would need to increase significantly. Even if it were to double or triple, a significant portion of taxpayers would still end up with tax increases. Any way you look at it, the elimination of SALT is a raw deal for the middle class.
The gentlelady yield? Right behind you. Yeah. I thank the gentlelady for leading. I couldn't agree with her statement more. I mean, even in my large rural, not exactly rich district in Wisconsin, over 27% of my constituents are itemizing and taking this state and local tax deduction. These are not Hollywood producers. These are not high-tech chieftains. These are just normal, hard-working families trying to figure out the best way to make it all work for them. And again, when you look at the equities involved and the perception that's being created out there, it's going to be awfully hard for me to go home and explain to those families why their deduction for state and local taxes are being eliminated, but large corporations, many of whom aren't paying any taxes to begin with because of the itemization that they have, are able to continue to deduct state and local taxes. And there's a problem with the perception of all of that. I would also submit that the reason we're stuck at 20 right now in the corporate rate is only because President Trump started the bidding at 15. And I think to the chair and this committee's wisdom, you realize, oh my God, that's going to cost too much. We'd have deficits for as long as the eye could see. And there's no way we could afford a 15 rate, so we're up to 20. But the truth is, your predecessor, Mr. Chairman, sitting in that same chair when he was putting together a comprehensive reform package, which was completely paid for, the best he could do was get to 25 without blowing a hole in the deficit. And I think even that is generous in light of the value-added tax, in light of the carbon tax that these corporations have to live in overseas that aren't part of the calculation that we're making here as far as the competitiveness of our rates compared to other nations around the world. And with that, I would like to ask unanimous consent, Mr. Chairman, to have included in the record at this time very interesting Associated Press article dated October 18, 2017, titled, "Corporations to Keep Tax Break Lost by Millions of Americans." That's unanimous consent.
Without objection.
Would you yield?
I'd be happy to yield, but it's Judy's time.
Yeah. Judy, would you yield? Yes. Thank you. Mr. Burkholdt, Ms. Chu pointed out that my friend, and it truly is my friend from California, his district, 24% of the people take a deduction, and if this were to go away, they would lose about $10,000. Also, California is a donor state. We get 87 cents back for every dollar we send to Washington. If this loss of a deduction goes through, would California become more of a donor state than we already are?
Mr. Thompson, I'm sorry, but the Joint Committee doesn't analyze changes in tax liabilities by state or congressional district. And as I've noted, there are pluses and minuses within each of the income groups. So I couldn't say on net whether what happens to California. California's income distribution is different than the income than the national income distribution.
Thank you. I'll take that as a yes.
But what I presented.
Oh, I wouldn't do that.
What I presented was that on average, across the income distribution, there were net tax reductions in every income category. So I really can't say. I'm sorry.
So, members, my intent is to recognize Mr. Curbelo and then if there are no others wish to speak on the amendment, to have the vote, move to the next committee, or next amendment, excuse me. My hope and intention is to continue amendments through the vote series tonight, come back and do that vote series, recognizing that that will, at this pace, require us to go very long tomorrow. I think it's important for us to do as much of this during the daytime hours as possible, but we want to make sure we get these amendments in and continue the work. So my encouragement is to let's make sure we're getting these amendments out, we're having a good, thorough, open debate, but we're disposing of them and moving in a good, thoughtful, timely way. Mr. Corbello?
Thank you, Mr. Chairman. Just a couple quick questions for Mr. Bartold. Mr. Bartold, this amendment that's under consideration now, do you consider it likely that it would cost jobs, it would cause job losses?
Sorry. Mr. Corbello, we haven't done any macroeconomic analysis on any of the proposals. The general thrust, as was pointed out, was to increase corporate tax burden relative to the chairman's mark. The chairman's mark relatively decreases the corporate tax burden. I can't tell you where this proposal would end up. You could still be at a net decrease in the corporate tax burden, and as a general matter, a net decrease in effective marginal tax rates on corporate investments should generally be pro-growth. So I don't have an answer for it.
Could it have the effect of shifting jobs from higher tax states to lower tax states?
The deductibility across states, it would increase without completely thinking through all of the state tax